Welcome to the Elite Automation e-commerce podcast. Today, we've got some incredible findings to share, all coming from Marketplace Pulse. We're going to break down the absolutely colossal numbers behind Amazon's market dominance.
Yeah, just take a second and let that number sink in. $830 billion.
All right, so let's get into it. We're going to unpack exactly how Amazon built this monster of an e-commerce machine, and maybe more importantly, what's still fueling its crazy growth as it barrels toward $1 trillion.
So here's what we'll cover. First, we'll talk about the sheer scale of this thing. Then, we'll peek inside the Marketplace engine. After that, we'll look at a kind of hidden strategy they use, check out their competitive advantages, and wrap it all up by seeing how everything feeds into that famous Amazon flywheel.
Okay, first things first. Let's try to put that massive number into some context and look at the growth story that even got us to this point.
And wow, this really tells the story, doesn't it? I mean, yeah, that huge 46% surge during the pandemic was a bit of an outlier, for sure. But here's the thing. Amazon didn't just crash back down. Nope, it just settled into a new, steady groove of growth, tripling its size in just 7 years. It's wild.
So, where's all this money actually coming from? Well, it's not just one thing. Think of Amazon as being powered by 2 different engines. But as you're about to see, one of those engines is way, way more powerful.
Now this is where it gets really interesting. This is the breakdown of the gross merchandise value, or GMV, which is basically every single dollar spent on Amazon. Look at this. Almost 70% of that cash doesn't even go to Amazon's own retail business. It goes to independent, third-party sellers. Amazon's own stuff, that's less than a third of the pie.
And this right here, this is the key. When you look at where the growth is coming from, the picture gets crystal clear. We're talking about almost $500 billion in new sales since 2019. And get this, over 3/4 of that growth came from third-party marketplace sellers. That is the engine pushing this whole train forward. Okay, let's switch gears and dig into one of Amazon's most clever and kind of sneaky strategies. You find it when you look at the gap between the number of things people buy versus the total dollar value of those things. So check this out. Third-party sellers, they ship 62% of all the units, the actual physical products, but they rake in 69% of the total sales value. So you've got this really important 7-point gap.
So, what's with the gap? Why is it there? Believe me, it is not an accident. This is a fundamental piece of Amazon's entire strategy.
And here it is. Amazon's own retail side, what they call first party, focuses on selling tons and tons of low-priced essentials. Things like paper towels, batteries, all that Amazon basic stuff. That's how they keep you coming back with those low prices. But then, the marketplace sellers, they handle all the specialized, higher-priced items. What does this do? It lets Amazon make a killing on fees from those bigger sales, all without having to stock a single one of those expensive items. I mean, it's just brilliant, right?
Right, so this whole balancing act between their own cheap stuff and the marketplace's more expensive goods, that's exactly how Amazon builds this massive, massive competitive moat to keep everybody else out.
And it's not just one magic bullet. Amazon's dominance comes from this coordinated, 3-pronged attack. It's a strategy that makes it nearly impossible for competitors to fight back on all fronts at the same time. Okay, first up, discovery. They are just flat out outspending everyone on tech. We're talking over $200 billion in recent capital spending, a huge chunk of that going right into AI. And this isn't some far-off dream. Their new AI shopping assistant, Rufus, it's already been credited with driving an extra $12 billion in sales. That's real money.
Next up, number 2, speed. And here, they're just untouchable. Over 8 billion items delivered to US Prime members either the same day or the next day. Think about that. That is a logistics machine that competitors who ship direct from China like Shein and Temu, they just can't even come close to matching that. And number 3, price. They absolutely refuse to be beaten on price. They even launched a whole section called Haul that's got over 1 million super low-cost items, aimed squarely at budget shoppers. So when you put it all together, the AI-powered discovery, the insane speed, and the rock-bottom prices, you get a fortress that's almost impossible to get through. So what's the big takeaway here? What does this all mean for the future? Well, it's all about one thing: feeding the machine. Or, as Amazon loves to call it, fueling the flywheel.
Every single thing we've talked about, the huge marketplace that gives you endless selection, the crazy fast delivery network, the smart AI that helps you find stuff, it all feeds into this loop that just keeps reinforcing itself. See, each piece makes the other pieces stronger, and that creates this momentum that is just so hard for anyone to stop.
And that brings us to the most important point. That $830 billion number, it's not just about sales, not at all. It's really a measure of the raw power of the entire ecosystem. We're talking fulfillment networks, ad systems, seller tools, and that ever-growing AI. The bigger that sales number gets, the faster and more powerfully that whole flywheel spins. Which kind of leaves us with one last big question to chew on. As Amazon rockets towards $1 trillion scale, maybe its biggest competitor isn't another company at all. Maybe its biggest challenge is just the simple law of large numbers. I mean, how do you keep growing in a meaningful way when you're already that unimaginably huge? Now, for those of you listening who are busy professionals and want to own your own hands-off e-commerce store, this is the kind of scale and infrastructure you can tap into. Visit our website to get started. The link is in the description.